in the last 2-3 years, and definitely in the last 1 year, there has been so much heightened conversation about, activities that Gift City, everybody seems to be opening up offices. There seems to be a lot of excitement. Originally, the whole idea of Gift City sounded like it was a place, destination where India could carve out a place where foreign funds could come and establish funds, and it would take away share from markets like Mauritius or any other destination, and funds could India could offer a destination that could rival these sort of markets. In the last 1 or 2 years, I think the conversation has also shifted in terms of how AMC's local funds are saying that we will set up offices there, go and solicit money from overseas investors. And lately, mutual fund houses actually setting up shops there or launching funds there to manage local investors' money in overseas equities. So Vaibhav, let me start with you. Tell us what exactly is the deal with Gift City? What is the real opportunity? There are all these 3 opportunities. What is the real opportunity?
No, thanks for inviting me for this conference. So you're right, that Gift City was started with the idea of able to attract foreign capital into India. But when you want to compete with the likes of Singapore, Mauritius, Dubai, you can't have a financial jurisdiction which is able to attract only investments into India. You need a jurisdiction which can equally allow opportunities for resident investors to invest globally. So I think a Gift City is now coming to the complete way of not only able to attract global capital into India, but allowing access for Indian residents to invest globally. So it gives you the opportunity for asset managers to showcase their entire product range, not only limiting to India, but all global products as well.
Abhishek, you have funds which actively managed funds, feeder funds that invest in equities. There is one cohort of investors in the mutual fund industry who want exposure to overseas, and it's been an ask with, fund. I think the industry has been talking to SEBI, and SEBI has been talking to RBI. There is a cap on overseas investments. But we don't see local investors really warming up, if I may say, or aggressively taking the route that you offer. PGIM offers 3 actively managed global funds. Why is that?
Okay, thank you for having me, Mahalakshmi, first of all. And I was actually a little inquisitive that I don't have a Gift City, but you still wanted me to on the panel, so I'm glad that I'm here.
Because that's the alternative,
but
right? Now
I got
that's
the point.
The alternative. Why is the alternative not working? Everybody wants to launch a fund out of Gift City, looking at a certain market. You have something that is right here. What is the difference? Why is it not working? Is this interest real? Is the optimism real?
Okay, so like every time, I'll try to get out some data which may possibly give you a little bit of a perspective. When you look at the home country bias, it actually exists across the world. And in fact, even for economies which have not produced capital market returns, the home country bias remains extremely high. So a case in point is Japan. The home country bias is 84% of the investment of domestic investors is in Japan. The most diversified household savings going into international investment comes from US, which is possibly to the tune of about 30%. I think it is not wrong for us to say that India is very much in its infancy. I don't think we have enough penetration. The other aspect is that Indian market itself has been very, very fertile. But having said that, I think in whatever limited time frame that you see global investing in India, I think we have been able to very respectfully garner decent amount of traction. It is always going to follow returns. There's no 2 ways about it. But having said that, I think if the tap was not to be closed, I think we were literally running on the 5th gear. So for that, I mean, I'm speaking on behalf of the industry. I think I see Akhil sitting here in Motilal. He can vouch for it. We can vouch for it. I think guys from Kotak can vouch for it, and so on and so forth. So I can safely tell you that there was enough work and enough interest. And I think that comes from the fact that when you think about not only the geographies, but also in terms of some of the themes which don't exist in India. Think about, I mean, I was just looking it up, and if you think about mobility as a theme, right? Mobility as a theme globally is growing at 38% compounded. Then not only the theme is itself growing slowly in India, but the outstanding size is so limited that if you want an exposure into that, you will have to go global. And this is just one, one very, very outsized example. There are tons and tons of other things, Mahalakshmi.
No, my question was not appetite for global. My question is the existing fund structure, which is the feeder fund structure.
Yeah.
And I was quite amazed to know that your funds are, the expense ratio is 2.5%. Of course, it's double of what a normal active managed fund is. Nevertheless, 2.5%, lots of funds in US have that kind of expense structure.
So 2.5%, first of all, is the complete structure. It takes care of the underlying fund structure as well.
Yeah.
And I think, I was trying to exactly answer what you asked.
So why is it that you're today not sitting on 5 lakh crore of AUM?
No, so I think one of the biggest reason is that when you speak to investors, and largely this has been a product which mid net worth, high net worth, family offices have liked. But when you see a scenario where you don't have visibility on the continuity of that tap in terms of regular allocations, people take a step back. But whenever, like for example, in the beginning of this year, not even the beginning, in fact, April of this year, when we reopened our funds, we had about 1,000 crore window. We are very much at the end of closing that window as well. So I think there is interest, Mahalakshmi. I think, as I said, the home country bias is always going to prevail. You buy what you understand. Otherwise, you buy what is performing. So you have to be cognizant of that.
Okay. Neil, how are you? I think your fund is coming up in the Gift City, right? How are you looking at this opportunity?
Yeah, so I think there's tremendous interest in global investing, and we've kind of done this for the last 15, 20 years now. In the mutual fund, obviously the tap is closed now with the 7 billion. So I think what people also want when they go to Gift City is also diversification of equity into different markets, but also diversification of the currency. So today when you are investing in a mutual fund, you're investing in rupees, getting in rupees. Today the need is also to invest in other currencies, and Gift City gives you that option to invest through different currencies, and people have different needs, education, building assets abroad and whatnot, So I think this opens the door. The other interesting thing that's happened there is retail funds. Now, before it was, the minimum investments was 75,000 to 150,000 USD, and your LRS limits is 250,000. Today, we can launch retail funds out of Gift City, and that is the exciting part, that you can go as low as $5,000 and $10,000. And why this number is important is because TCS starts after 10 lakhs. So if you have a $5,000 or $10,000 kind of minimum, then you don't even need that 20% TCS that gets cut. So retail participation can be there. Onboarding has become much simpler now. It's almost digital. I think over time we'll get back to, we'll probably get where how easy it is for a mutual fund, how we onboard people in a mutual fund. I think in a few years' time, I think that will be the case with Gift City too. So very exciting times ahead.
Fair enough. How big do you think this Gift City retail interest can become?
So Mahalakshmi, I first want to just add to what Abhishek had mentioned. So if you see that we had launched a product called as NYSE FANG product. In a very, very short time, because the fund did exceedingly well, we saw huge participation from retail, from HNI investors, and it became the go-to product. In fact, over the last couple of years, some of our schemes on the equity side were not getting as much flows as we were getting on the FANG side. So, like Abhishek mentioned, it all boils down to performance. Whatever is performing does get lion's share of flows. And mutual fund industry gave you that opportunity of getting retail money, HNI money, in a very simple manner. In Gift City, like Neil mentioned, the advantage we will get is we will be able to get retail applications as well. But the only challenge remains that still everything has to be under the LRS window. And if you manage to launch retail funds within 10 lakhs ticket size or $10,000, 5,000, then TCS is not applicable. But LRS transfers are not as easy as investing through the mutual fund route. So it will require a fair amount of education for retail to understand how LRS transfers happen. We've launched an outbound fund about 2 months back. We got a very good response because The fund has themes like semiconductor, AI, digital infrastructure, data centers, all within one portfolio, like Abhishek mentioned, which you can't get access in India. But the challenge which I found most of the investors faced was the ability to do transfers. So the banking system in GIFT City is not as robust as we have the mutual fund payment system, where you could transfer money instantly. And once we can solve that, I think retail can become very, very large and can attract huge amount of capital through the GIFT City route.
Fair enough. So how does this again rival with the feeder fund structure? Because that, whatever said and done, that category still exists. And if every AMC is going to sort of, exploit this, and the onboarding is going to be as simple as Neil and Vaibhav are saying it is going to be, what happens to the feeder fund structures?
So one way to look at it is the feeder fund offers you an access into these underlying funds at practically 1,000 rupee SIP or a 500 rupee SIP and a 5,000 rupees lump sum. I don't think we are going to go down to that level. The other aspect is the ease of operations.
The investor who is investing in that fund is not 1,000 rupee, 500 rupee investor, right?
We'll be actually surprised, Malakshmi, to a point that, see, our journey in international investing started, within PGIM, it started in 2018. And very much similar to what Vaibhav said, for us, before our equity journey started from 18 to 2020, the only fund that was growing for us was global equity. We had an SIP book to the tune of about 40 crores, and it was granular. So, as I said, and as Vaibhav kind of chimed in, what performs gets the money. And I think that's exactly what we saw. But having said that, coming back to your main question, if you were to think of it from a parallel, I think ease of operation, simplicity of not worrying about currency, because everybody doesn't understand all those transactions so easily, unless and until there is education. I think there will always be a little bit of a benefit that the feeder fund structure would have if the tap was to open.
How do you see the currency risk in this product, Neil? Because one is always a little bit confused about where the rupee is headed, because for a good part after post-COVID, there was, in the first 3 years, people thought that, the trajectory will completely change. And instead of a depreciating currency over a period of time, not only will our fall be less, but we might start to appreciate. It's been anything but. In the last 1 year, it's, what has happened is instructive. All other currencies against the dollar have gained except for the Chinese currency and the Indian rupee. How do you see the currency risks, and what is the messaging to investors around this?
Sure, there's currency risk is going to be there. There's nothing anyone can do about it, and definitely not us. So for us as fund managers, as asset managers, main thing is to select stocks and invest the money properly. So currency risk will be there, but the main thing, like I said, was it's about the diversification. It's actually reducing the risk. So currency risk, though, might be there, but on your overall portfolio, when you're investing in different markets, you're actually reducing your portfolio risk. So that's what we are talking about, and yeah, currency risk is going to remain, and nothing you can kind of do anything about it, so just live with it, I guess.
Is that your message? Live with it?
So two things, Malakshmi. First is, when you invest globally, actually currency risk is actually in your favor.
Right now it's in our favor.
So if you feel that the rupee will depreciate, then, global investing, you're already plus 2-3% to start with.
Yeah.
So you did not worry. So global investing will not only make sense because you start with an advantage there, but look at the last 10-15 years. India has been one of the best performing markets in local currency, but in dollar terms, Indian market has just generated about 8-9% returns, while the S&P 500 has delivered about 13-14%, Taiwan market about 12-13% in dollar terms. So there are enough markets which in dollar terms are able to do much better than India. And if you look at some of the themes in India, and I want to give references to maybe 3 or 4 themes that we are very bullish as a fund house, and we don't have investment space, is artificial intelligence, semiconductor, blockchain, and disruptive materials. If you were to look at these 4 themes, in India, you don't have maybe 5 listed companies in this space, in these 4 themes. So forget the currency part. If you want to have a universe of stocks which can give you exposure to such large themes, which can become very large in 5-10 years, it completely makes sense to invest globally and reduce your currency risk.
Right. Where do you think, Abhishek, the big money will go? The big investors will take the, I'm saying not ultra high net worth, but the high net worth will go through the gift city route now, or would they prefer to take a rupee kind of bet?
I think it's straightforward, Mahalakshmi. That's the only tap which is open. Having said that, I think on the feeder fund, whatever I'm hearing on the industry and whatever we are experiencing personally, till the point the tap remains open and we can accept money, I think there is enough amount of interest that is getting generated. But having said that, while those numbers are not publicly, available, at least the interest that I have seen in terms of HNIs, ultra HNIs, looking at Gift City as a constant medium of diversification, it is only getting increased.
No, I'm just asking from the currency perspective. Where is, what is the Indian investor really looking for?
So one way to think about it, Mahalakshmi, is that if somebody is really looking at de-risking the whole currency aspect of it, Gift City doesn't provide you, 100% portability. You ultimately have to bring the money back unless and until you are going and establishing an OPI or ODI outside. For a normal retail investor, you will have to bring the money back. You are still mapped to a bank account here in India. So I don't think that's a solution that gets provided. That can be provided through a Cayman or a VCC structure in Singapore or things like that. At least that's my understanding. So I don't think, first of all, let me chime into what Vaibhav said. I don't think currency is the biggest variable here anyways. See, we manage global funds which are diversified and which have always been exposed to different geographies. So the equation is never going to be about India versus US or India versus Japan. It is about companies which are doing well and how they offset each other, in the whole game. So we have exposure in developed North America. We have exposure in, Poland, Italy. If you were to worry about currency, you will never go to Italy. But we have had one of our huge exposures in Italy, and which has made us money. So my way of looking at it is, if you buy the right businesses which are compounding faster, I think currency will take will take care of itself. Don't think that should worry. And I think between the two mediums, I don't think there's too much to choose.
Sure, sure. So at the heart of all of this discussion, in the end, everything boils down to performance. And performance boils down to, what is your team structure, what are the competencies of the fund managers, and so on. Neil, so what is the, expertise that your AMC really brings to the table? Because unlike a foreign company can say that we already have teams and partners who are investing abroad, so we draw on their expertise. You are a homegrown India company. How have you set yourself up to succeed and perform in overseas markets?
Yeah, so I think our strong point, excuse me, our strong point is research, and we've been researching in-house foreign stocks for about 20 years since the financial crisis. We've been investing for our clients since 2010-11, and then in the mutual fund post that. So research is common between for the whole organization in terms of the research process and research sharing as such. So research is something that we are very confident about doing. Other than that, I think one thing that I think Gift City needs to probably get better at, or something that needs to improve, is the taxation part of it. So launching, you're taxed on your churn. So every sell decision, if you launch a fund out of Gift City, is taxed, and which is not very efficient. So I think what we are looking at from a more efficient structure is the feeder fund structure, is the FOF structure. So where you're not taxed on the churn, the dividend withholding is 15% instead of 25%, say in a UCIT kind of a structure. So looking at things where efficiencies can be built instead of just starting up and launching retail funds out of GIFT, maybe not the best idea. I think you need to probably go the feeder fund route from GIFT to, say, a UCIT structure to get the best and to improve performance. So I think research and just thinking about the clean efficient structure is something that we're
So
looking
the fund that will come up is also a feeder fund out of
Yes,
this?
we are going to launch all
Not
feeder
the-
funds.
Okay, okay. And there'll be one, or there are going to be multiple?
We're going to have multiple.
How many?
So right now, 3. So we got a PMS running right now. But from a retail fund structure, from retail fund point of view, we're going to launch 3 funds over the next 1 year. I think 2 will be in the passive variety, and 1 will be an actively managed.
And what are the themes?
I mean, it's probably going to be a flex. I mean, the passive funds will feed into a passive fund like S&P 500 and Nasdaq. The active fund will be like a flexi cap kind of go anywhere kind of fund where wherever we find opportunities, we'll invest there. Yeah.
Okay, there'll be broader index.
Yeah.
Not like particular themes.
Yeah,
or-
but we'll stick to probably globalized businesses and developed markets. We won't get too exotic in going to say Thailand and China and stuff like that, where we don't really have the confidence in the country. So whenever we have confidence in the country and the rule of law is strong, we will invest our investors' money in those countries.
Fair enough. Vaibhav, what is your product strategy out of Gift City?
No, so I completely echo to what Neil had mentioned. So what happens in a gift city structure, the moment you buy and sell stocks, within a 2-year period, your tax incident moves to the marginal tax rate. So the most efficient structure is to create a feeder fund structure where underlying your funds are based in different geographies and your gift vehicle can feed into that. And those underlying funds can keep doing the churn without any tax incident. Thankfully, the advantage that we get is being a global AMC, we have about $300 billion across various of our offices. And we try and use some of those products and structures to feed into it. So it becomes a very tax efficient way for investors to access global investing without any tax incident, because the underlying funds, especially in Singapore, Dubai, etc., don't pay tax while you churn the portfolio. So that's an advantage that we can create, and the India structure can be a clean way to invest globally.
Okay, and any themes that you are...
No, I mentioned to you a few themes that remain very bullish.
So those are the themes you will launch?
Yeah, so our product, which we had launched, a global allocation fund through the Gift City route, gives access to artificial intelligence, semiconductor.
That's a diversified fund.
Yeah, it's a diversified fund, gives you US, China, developed markets, and 3 or 4 themes that we remain very bullish. So it gives you a blended portfolio.
And any other funds you
So we'll be launching a retail outbound fund, which will give access to investors to investing into global markets in a very simple manner. Like I said, one of our star products was NYSE FANG. Simple product, everyone consumes every day, so you understand it. Can we create a simple product which retail investors can understand, which they can invest in? So that's the idea that we will want to launch through our outbound fund.
And what will be the ticket size?
Ticket size will be about $5,000 to $10,000 within the TCS limits.
Okay.
So but I just want to add one thing which I think the Moneycontrol and everyone should educate, is that the regulator allows accredited investors. And that's something that all of us have not utilized to the large extent. And through Gift City, you can launch products for accredited investors. So in our existing products, we even take 10,000 ticket size for accredited investors. So you don't need to wait for retail funds. You can have a lot of accredited investors coming through Gift City AIF structures as well.
Understood. Abhishek, will you also be launching out of Gift City now? Is that looking like a very alluring opportunity?
It is. To be very honest with you, internally, if I was to tell you, I think from my side or from the product committee side, the project is already done, submitted. We are awaiting our global approvals. As you will understand, one of the flip sides of being in a 100% global company, I think Vaibhav can, understand that, is that you have to depend on the stakeholders for final approval. So we were just awaiting that. But I think the opportunity is immense. And if we have a few minutes, let me add to whatever we have discussed till now. The opportunity is just not in terms of themes, but also in terms of asset classes. So if you were to think about real estate, REITs, the nature of businesses in REITs, real estate operating companies in the developed world is very, very different. Think about a 6 to 8% dollar yield product. Not only is it extremely differentiated, but it diversifies your portfolios in the true sense. Think about mezzanine products. It may, you can possibly say that it is taking the risk to a different level, but these markets are extremely mature. Can those be brought in as private products through the Gift City? Answer is yes. So Gift City is extremely, enterprising from our perspective.
Right. Especially a lot of those products which are not present in India, themes, even debt products that are not available. Thank you so much, gentlemen. It was a very insightful discussion. Definitely, I learned a lot. Thanks very much and all the very best.